Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you Morning Call. So futures are down this morning. Earnings continue to roll out and have been failing to impress for the most part. The markets did have a late rally yesterday. So Scott, first off, what do you make of yesterday's action?
You know, yesterday the market was weak all day, and then finally the last hour of the day, it staged a last hour rally. What this did, though, is probably get a lot of traders who were short thinking that we would break below the recent support, break below 1425 in the S&P, where they would see lower levels like a 1400 or perhaps lower than that. They covered, because why not? You have a last hour rally, a small reversal pattern. What that does is tells traders that, you got to cover some of your shorts. But what it also did is it probably baited in some new longs, because what we saw is a mini reversal. It wasn't a blaring reversal, but a mini reversal where we took out a prior low, came back above it, closed near the highs of the day. So the good book says be long some stocks, especially ones that closed strong yesterday. So you have guys coming in today that covered their shorts yesterday that are not happy. Some people coming in long with the futures down 13 to 15 handles. So they have to figure out how they could salvage that. So today's going to make for a pretty interesting trade.
What else does the good book say? Who do we look to right now? Should we be looking to leaders to bring us off our lows?
Yes, what you want to do is you want to see, can anything go green? Can the banks that have been strong go green, lead us off the lows? The home builders have been strong. Technology just finally showed a little relative strength yesterday with Apple. We'll take a look at that after. But on days like today, you want to see, can the market come off the lows? How much of this gap can we fill? Because if we don't fill a big portion of this downside gap in the first hour, sometimes that could lead to a gap and go in the direction of the gap, which is obviously to the downside today. And then you have to start looking at levels, way underneath. And that's when you start, playing the game, cover your shorts, test some longs, and then figure out what price can stick.
Well, speaking of taking a look at levels, let's take a look at the S&P and tell us what levels you're looking at.
Okay, so let's take a quick look at the S&P. We'll take a look at the spiders because a lot of guys will be trading that. Overall, you take a big look at the spiders from, the October lows of a year ago. You look where we are now. We've had a heck of a move. And right now what we've been doing is we've been hovering on major support that goes all the way back from when we broke out earlier this year. So if you take a closer look here, you will see that yesterday, all right, we broke below a key level. We broke below, just say 142.58 and closed with a decent reversal. It wasn't like a pounding. It wasn't crazy to the upside. So that did get some guys to cover, some guys to get long. So what I will do short term is you want to look at yesterday's low, 142.28. We were below it briefly this morning. I'm not exactly sure where we are now. I actually nibbled a little bit because I came in flat today. And then you want to take another micro look here. You will see that here is a gap. From, remember when the ECB came out with their news that they were going to keep the euro or try and do everything in their power to keep the euro together. That comes in around 141.77. And then, the 100-day, which has been moving up, stands right now at around 139.55. And you also have, a decent support area from August, which comes in around 139.80. So, use yesterday's low. You have the gap here, and then you have a major area right around there.
Let's take a deeper look at the S&P levels. If we use Fibonacci retracement levels, we can actually see that the market's done quite well. Let's see how it's done since last year's major reversal.
I think that's very important because if you talk about that major reversal from October, it's been about a year. So this is a basis for macro investors, and we always talk about know your time frame, know how actively or how active you want to be in the market. So you have to know whether a pull-in is in jeopardy of breaking an accelerated trend, intermediate trend, or a macro trend. So if you go and take a look at the trend that's been intact since October 4th using these Fibonacci retracements, you will see that, we really are very strong. And so far we haven't really had much of a pull-in. You put up, your Fibonacci retracement, you go to the October 4th low right here, you go all the way up to that September 14th high when the oscillator hit plus 60. Remember that? We said sell some stuff there. Then you take a look right here. So the 25% retracement of this move, which still is a very strong market. You could pull back even to the 0.3, 0.2% retracement, or even the 50, because look what happened here. If you go back here from actually, I could do that right now real quickly because I just want to show you how from first times first, the October 4th low, you go all the way into this high here, which was the, earlier this year. We held right below the 0.38, 0.2%, but above the 50, and it also coincided to that wedge breakout. So anyway, that's what held there. So if you go to where we are now, okay, I know there's a lot of lines here, so follow me along. The 0.25 retracement, the 25 is 138. That is also, somewhat around where, the 200-day is right now. So if this market wanted to continue to pull back, and we went all the way down to 138, which is about 1380 on the S&P, it still wouldn't be unconstructive. It would actually be healthy. It would still show some type of continuation where if we did go, to this area and hold, you could still next year go a lot higher and still be in this trend, okay? Because this trend, does go all the way back, and it's been strong, and there it is. This would be a low, a higher low, and then here would be another higher low. So just know your time frame and know, which levels you're looking at, because the macro trend is still in there, and no one should be sweating if you're, a macro investor.
And what if we take a little bit of a closer look at it using Fibonacci since the June 4th low?
Okay, for that one, I'm going to go with the SPX because I have a lot of noise, a lot of lines there. And this is important because if you go from the June 4th low, you're probably more of an intermediate trend trader like myself. There's been 2 or 3 times this year where I've been able to hold 10 to 15 positions with a hedge, manage them, and make a lot of money when we're trending. Right now, we're in that little phase where, I'm being tactical versus portfolio approach because I'm not exactly sure where that pull-in goes. So if you go to the SPX, which is very similar, okay, to the spiders, it's just the the S&P cash, and you go with the Fibonacci retracements from the June 4th low, go all the way up to the September 14th high, which comes in right around there. We are right now at the 25% retracement. Right here is that 1422. Okay, so it's trying to hold the upper level here, but it doesn't have to, which I just showed you on the macro level. So we could still pull into the 0.382% retracement, which is about, 1405, or sorry, 1395. Or, we go in between the 0.38 and the 0.50, which you saw us do, on the more macro sense, and that would pull us to about 1380, which is where the 200-day is. So these are very important levels. I would say, if we get down to 1380, okay, at that point I wouldn't be running for the hills. I would be looking to buy. But that's a big if. And, to be honest, it's only about, from where we are, 1420, about 40 handles from now. So it's not so out of question here. But in order to get here, we're going to have to go to this one first, and that's around 1395.
All right, well, coming up, we're going to be talking about tech and how to play it right now. But first, a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and talking tech. Let's start with Apple showing relative strength yesterday. Scott, I know you traded it, booked some profits. What's your strategy heading into today?
I think with the futures down, this is probably a very high. You have to look at Apple to see if it can go positive. There was volume yesterday. There was power yesterday. You still have an event later this afternoon. So I do think that you can buy this dip. The good book probably said to take home some long yesterday. For some reason, I just went home flat across the board just because I've been more tactical. So for me, if you look at Apple, you will see that here is that potent chart. Okay, that potent daily bar which took out the Friday high. We closed above the 100-day. So I would say the 100-day would be a great spot. If Apple around the open opens around the 100-day around 627-ish, that would also be the top third of yesterday's move. I think you could buy that, and then if it trades through yesterday's high of 635, it could show you continuation. Okay, if you want to go to the quick 5-minute chart just to see yesterday, because we went over this, so you want to draw support 1 and support 2 right here, this would be pretty big support. Okay, so if you do get a pull into this area, which just takes back the last hour move, I would say look to see if you could be a buyer here. If it's really, really, really strong, you see the last little flag pattern right here that it broke out from around 630. So 630 and then right around between 620, 627, and then I guess the line in the sand would come in right around here about 625.50. So if Apple is any good, I don't think that it breaches this area to show commitment to yesterday's move. And I think that right around here, if it happens in the first 25, 30 minutes, it's a gift to try and buy.
And then there's Google, which continues to show weakness. Would you say that's in a void for now?
It's somewhat of an avoid, but it's down $5 or so, or $6, close to 670. Although I do think, it's going to work its way down to, 650, 660. It's worth a look today. Sometimes they like to go after, leaders, and a stock like Google down in a down tape. So if you look at the chart here, you will see, if you got out on earnings day or before and didn't hold it into earnings, which a lot of us don't do, especially me, you just missed out on about 80 points to the downside. So you do have the luxury of trying to, get in at the right price. So right now, yesterday's low is 669. Maybe buy versus that low to see if it's, putting in a 3-day bottom process, or maybe it does exactly what it's done the last 3 days, breaks below it, comes back above it, but has a little bit more power to the green side. So I'd say macro, 650-ish is a place where it probably is a magnitude, but today, if you want to buy it versus the pivot of 669.70, I think it's worth a try for some cash flow, but I don't think it's your swing trade opportunity. It's just tactical.
And Amazon lost over 2.5% yesterday. It did break below its 100-day moving average. So where would you say next support is?
This one, we talked yesterday that it could see more downside and at least see the 100 days. So I'm happy that guys weren't buying it too early. And if you look at the chart of Amazon, shows you how you have to have high level stops. This was one level where you could have been stopped out to protect your gains when it was flagging and failed. Or if you missed that, look at this support going across, this level right here could have been a nice stop for you around 249, and look where it is now, closed below the 100-day around 233. I think tactically today, take a look. I'm going to take a look. If it's opening down $3, $4, maybe it tries to go green. The 200-day and this major support comes into play right around here. So, I know earnings are coming out soon. So if you want to just look for a tactical trade, just do it for the day, and then we'll, reevaluate it when we come earnings time. But a lot of these, stocks that have huge valuations are not getting passes. So the earnings are going to have to be good. And right now it seems like people are a bit scared, but at least it's pricing in something where it's not priced to perfection going into the report.
Let's take a look at BIDU. Its action remains pretty choppy. It's trading around moving averages right now. So what levels are you watching?
This one got downgraded, I think, like 5 times in the past 2 weeks and couldn't go down. So it's a little different than, Apple being upgraded 7 times at 700 and goes down, or Google finally upgraded 750 for 850, goes down. This one's been, under pressure, and then it got downgraded 4 times, 5 times, and didn't go down. So for me, there might be a trade there heading into earnings. So if you look here at the chart, you will see, there's, definitely it's been very choppy. It's been in a void, but you have a level of resistance right here. I know if you were short versus this 116, if it started getting above it, you'd probably get scared and you cover a little bit. So, here we are holding the upper end of, you could like draw this lower level channel. So it's showing some commitment up here. I do think if it could finally get above, just say 116, 116.30, I might take it for a trade to retest the 200-day, which comes in around 121.
Now, what about LinkedIn? This one continues to show weakness. Would you say it's a stock to avoid until earnings? It reports November 1st.
That is something I would say. And, it broke also the 21-day moving average. We talk about staying with rallies with momentum names if momentum stays in the stock. It's also different if you're a macro investor. Some people are holding it for a macro play. At this point, it's still fine. I know it's a little edgy now, but 116 was that upper level that we told you, where at least I was trying to hold some and I got stopped out of. You take a look at the chart here, you will see that was right around here, right when it broke this area, and I saw no commitment to this upper range. Momentum, instead of increasing, left. That's my out. And now we're coming into the 100-day, coming into support. It's trying to hold around here. I think earnings is going to be very important. It's delivered the past few times. If it delivers again, I don't see any problem with this one, making new highs once again as soon as some positive stance or constructive nature comes back to the market. So we've seen this before a few different times. Right now I do think if you sold here, maybe as a trade, look to see if you could get something for cash flow, but you're not going to see a move until after earnings, and watch to see how it reacts after Facebook today. Facebook's after the close.
Okay, time for some quick hits here. Goldman broke below the high-level stop of 123 yesterday. Where would you revisit it?
I want to see if it holds yesterday's low. It went down to like 122, and then it helped spark that last hour rally. Banks did rally yesterday, so I would say at this point, some guys are trying to be cute and shorted yesterday. I said I'd just rather see you stop yourself out and then wait for a better price. You go to the chart here on Goldman, you will see it's still holding up very well. It's been a massive move. You know, this 8 day is starting to curl down. Here's your 21 day. I'd say if you were looking for an entry in Goldman, I would say wait until about, 119-ish. I think you get that level. If you're trying to be cute, just be a little careful, because trying to be cute and catch a move like we did from here, to this downside there, it's not the easiest thing to do.
Now, what's your game plan with GLD? Held its 50-day last Friday, closed above it yesterday.
This one's been so choppy. Gold and silver had an unbelievable move from August 20th, August 21st, went all the way to resistance. Gold was hovering below 1800. For me, I was looking for some kind of momentum continuation trade, but then all of a sudden, gold broke the 8 day, the GLDs broke the 21 day. That got me away from the trade. And then yesterday, it bounced off the 50, but today it's opening below it, and another frustrating trade for guys looking to maneuver. So you look at the chart here of GLD, you will see your next major area of support really comes in right around 163. So, yesterday you had an inside day for a positive, okay, and now it's opening below 166.23. So, you do have a minor level right across here. So I would say, if you're looking to buy back and you sold it well when it broke, this upper level, like ascending channel right there, maybe on this day, you definitely have the luxury of looking at it between 163 and 165. And if you are short, this is an area I would say you probably cover.
And Las Vegas Sands putting in a series of higher lows. At what point might it be buyable?
Right now, guys are trying to hold on to this. This one is acting better ever since, remember that July capitulation low on the last quarter's earnings. We're like, look at this area. It most likely is a low. We've had numerous buy setups, and right now it is holding up okay. You look at the chart of LVS, you will see that here was that capitulation low right there, and then you had so many little flag patterns to buy. Each one of these resolving to the upside, each one continuing some of the pressure till finally it met some really big resistance. But what did that mean? It just could have meant that it needs more time. Look at the size of the move from the lows, and right now it is holding the upper end of this channel. So I do think it's worth a look even today. Today on the down open, maybe it goes from negative to positive, holds the 50 day. The 50 day comes in right around 44.14. So this is something I will watch to see if it can go green as a potential. It's not a leader right now, but it is okay, acting better. And then at some point later this year, if it takes out this 46.45, you could see more upside action. Okay, so at this point, it's worth a look today.
And Caterpillar gave a nice trade yesterday. You booked some profits. So when might you take another look?
I'll look today. Caterpillar came out with numbers. They were pretty soft. Their outlook, they're trying to, it's funny how these companies are trying to hedge themselves. They can't predict 2013, so they're like, okay, 2014 or 15 might be better. I don't have to, have accountability to that statement for a while. But anyway, you look at Caterpillar, it was negative. It was down 1% or so. And then yesterday held support. I know for us on the virtual trading floor, it was a nice little trade. Went from negative to positive and closed, near the highs of the day. So today, with the futures down, maybe it continues to try and hold this support. So I will look to see if this is something that can go green today for some cash flow.
Finally, Facebook has been weak heading into earnings today. What levels will you be watching?
This one is such an anomaly. Obviously, everyone knows what's happened since the IPO, how it opened high and everyone gave it a huge valuation that couldn't be sustained, and then everyone wanted to hit the exit on it, and then NASDAQ screwed up and they couldn't handle the volume, and PS, you look at the chart from where it came public to where it is now, and it's been pretty much a disaster. A few times it's looked good, it's failed. One of the times I remember I was on not Fast Money, it was on Mad Money. Looking here, it actually looked like it was trying to, put in some type of, consolidation pattern that could trigger to the upside, but we got stopped out. Boom. That's why you trust your stops. And then it became a decent trade down here. This is when, it made a new low. It broke above this descending channel. We were buying it here, it gapped up, and gave you some nice action. I think the last time I traded it is when it looked as if it was going to hold here and continue, but it didn't. Went to the downside, so it got stopped out. And now this is where we are. You want to know major levels? I guess if they can't continue or they can't show that they're trying to monetize search and earnings are soft again, watch 1755. This is the low. This would be an area that they're going to try and hold. If for some reason earnings are good and the street wants to put a positive spin, first level for it to get above would be about 2048, and then the next real level for it to change would be it getting above and staying above this 23.40 area, right around there. So at this point, doesn't look like anyone's expecting much. A lot of people probably covered their shorts already, and anyone that wanted to get stopped out probably did. Now it's just a question of what's next, and I'm going to wait till after the report to trade it.
All right, so what will be your focus heading into trading today?
Just, what can I buy in the red, and can it go green? And if I buy something and it's heavy and it can't go green, maybe there's more downside action, so I'm not going to get stubborn with it. Today for me, it's probably going to be a level versus a level. I'm not just going to cost average into the spiders the whole way down. I'm not just going to say, okay, Apple was really strong yesterday. I'm going to buy it down $5, $6 and stick with it if it goes down 9 to 12 because it was up 24 yesterday. So I'm going to just go level versus a level, try and give things a little bit of room. But I know that I came in this morning flat, not in the pain of a 13 to 15 handle down move. So to me, there's opportunity. I'm not caught. I'm typically caught in something like that usually. So I'm going to see, if I did go home long certain things in yesterday's small reversal, what would I be taking pain in and what could I buy fresh, and see if there's an opportunity there versus, just people salvaging the trade for continued downside action. And at this point, I would stay tactical. This probably is not a level to start putting on your portfolio approach and your swing trades. I do think it happens, but I don't think we collapse 15, 25% like the bears are saying. I do think if we do see 1380, if we do, I think that'll be a really nice buying opportunity, and we'll measure what's going on then.
And with that said, happy trading, everyone. Have a great day.